Hi everyone, and welcome to Basic Banking Uncovered, and thanks for joining me today. This is your second time watching. Thanks for coming back. So today we're going to jump right in and we're going to talk about RRSPs, which stands for Registered Retirement Savings Plan. So I talked about tax-free savings account, and so these guys are often terms that are very misconstrued and confused. So I want to clarify how the RRSP works and the difference between the TFSA. So RRSP, Registered Retirement Savings Plan, is essentially used towards your retirement. So if you are a working adult, you essentially get an annual contribution room. And this is very personal to you. It's approximately 18% of your designated income on an annual basis. And the government essentially rewards you for putting money into this account. How do they reward you? They basically take off taxes. So let's say hypothetically, to make numbers easy, you make $100,000 a year, your contribution room is $18,000. You put in $18,000 into your RRSP. I am not an accountant, so this is not the correct calculation, but let's say hypothetically then you look at, okay, I made $100,000, but I put in $18,000, therefore I'm only going to be taxed on $82,000 worth of income. Again, that's not the correct calculation, but this is just a hypothetical kind of example. And then essentially that means that you pay less income tax because the government kind of says, okay, you made less money because you put it into your RRSP. And then you either get a higher tax break when you do your return at the end of the year, or you're going to get, you're going to pay less taxes. So that's the benefit of putting money into the RRSP. The other feature is that it does grow tax sheltered, similar to the TFSA. However, when you go to take that money out, you actually do pay taxes. You pay a certain percentage when you take the money out immediately, and then it gets added back as a source of income. So realistically, there are only 3 times you want to take money out of your RRSP. The first, and one of the most common, would be obviously when you retire, because this is a way to supplement your income. Number 2 reason, which is probably the second most popular, is for your first time home buyers plan. So the government allows you to put in money to your RRSP. You get the tax break when the money goes in, and then essentially you're allowed to, let's call it, borrow $25,000 from yourself. Meaning what they let you do is take out $25,000, put it towards your first time, and then you have 15 years to repay that money. And the government will tell you on your taxes that this is the amount that you must recontribute. The benefit of taking out the money towards your first-time home buyers is you get that tax break when you put the money in, and then you borrow that money and you put it back so that when you go to retire, you still have that money. The other benefit, obviously, is when you put that money into your RRSP, hopefully, similar to your tax-free savings account, you were strategic and you invested it properly, and then that money actually grew and accumulated. So maybe you actually only put in $23,000, but then you were able to take out that money and make, $2,000. You can also do the same thing if you have money in your RRSP and you go back to school. So let's say you've been in the workforce, you've contributed to your RRSP, and you're trying to figure out how you're going to fund your tuition. You can take out $25,000, use it towards school, and then same thing, you can put that money back into your RRSP. And this info, similar to your tax-free savings account, is through the CRA website login. Again, I just want to stress, banks don't tell you your contribution room, credit unions, investors, they don't tell you your contribution room. This is all based on the government. You are responsible for finding out your contribution room, and you are responsible for how much you contribute, and you're responsible for if you over-contribute. If you over-contribute, you're actually going to pay a penalty, so you want to be really careful. And that's all for me. So thanks again, guys, for tuning in. I'm going to attach links like last time. I'm going to attach the RRSP, just how does it work, the first-time homebuyers plan, lifelong learner, and also just information about how you can find what your contribution room is. And if you have any further questions or comments, please feel free to comment below.